Now, Indonesia is the third best performing market in the world this year, surging almost 60% behind only Peru and Brazil. Investors are betting on the archipelago on optimism President Bambang Yudhoyono will win next month's election. Manulife told Bloomberg recently it expects Indonesian stocks to gain another 19% this year. Now let's get insights into Indonesia and the economy from Mari Pangestu. Indonesia's Trade Minister Ibu Mari joins us from Jakarta. Ibu Mari, good morning. Indonesia still in headlines for good reasons. Morgan Stanley recently saying Indonesia should be added to the list of BRIC nations. What do you think?
Well, I think if we can maintain our current growth rate and continue the policies that we are undertaking, we hope that we can grow 4.5% this year and be able to recover more next year to grow at around 5 to 6%. But it's important to maintain our current policies for the next 2 years in light of the response to the crisis.
Are you optimistic that can be done? I mean, given that President Susilo Bambang Yudhoyono is likely to win the election.
Well, I won't speculate on the outcome of the elections, but what we have been doing is obviously fiscal stimulus, making sure that domestic consumers can maintain their purchasing power, including the lower income groups, and this is certainly reflected in the budget for this year and next year, including subsidies for food and some cash transfer this year, not so much next year, and focusing on infrastructure as the priority for the fiscal stimulus. So we hope, as was the case in the first quarter growth, domestic consumption was actually growing at a higher rate than normal, and the government consumption has already had an effect on the economy. Predictably, exports and investments are down, but we've been able to more than offset it with domestic sources of growth. So next year, going into next year, we hope that exports and investments can begin to recover.
I'll pick up on exports slightly later. For now, though, I'd like to pick up on trade issues. A couple of issues still outstanding, especially with trade. Among them, the U.S. Senate decision to restrict tobacco products, including clove-flavored cigarettes. What's Indonesia doing about that? How are negotiations going right now?
Well, we have voiced our objections with regard to the tobacco bill. This has been quite a lengthy process, and it has unfortunately passed at the Senate level. And we feel that this is discriminating against cloves because menthol is not considered flavor, yet cloves, which only account for a small percentage of flavored cigarettes, is being discriminated. So we will be looking into that. We will be having consultations. And if we feel that this is discriminatory, I think we will, of course, take it through the normal processes in the WTO procedures.
Oh, what's a possible fallout? What cost?
Well, in a way, it's not so. It's a matter of principle. The amount of exports is not great, but obviously, if this is seen as discriminatory, we would pursue it through the processes that allows us to do this in the WTO.
You know, on protectionism, the EU spoke out yesterday to say the G20 have gone back on promises to scale back on protectionism. Indonesia was one of the countries named. Any progress on that front?
Well, basically, what we have done, a number of policies that we have undertaken recently, we would say that none of them are WTO inconsistent, and all of them have rational objectives, and they are not affecting a large portion of the trade. They have consumer safety, better regulation of legitimate imports as an objective. So we do not feel that this is in the territory of increasing protectionism, and we believe that it's still within our G20 commitments, and they are all certainly within our international commitments, whether multilateral or regional.
Ibu Mari Pangestu will pick up the discussion very shortly. Do stay with us. For now, those signs the U.S. recession is easing, having a mixed effect on commodities. The speculation demand for crude oil and copper will rise as the economy improves. Crude currently up by 0.3%, 71.56. Copper down by 0.4%, 227.30 at the moment. But again, in the dollar is diminishing the appeal of precious metals as an alternative investment. Gold at 935.60 an ounce, up by about 0.1%. Silver at 14.245, currently pretty much unchanged. Now, stay tuned. We'll have more with Mari Pangestu next. Our regular Forex segment is also in about 20 minutes. I'll be joined by currency reporter Trish Louie. Email us your questions, tradewithhaas@bloomberg.net. Stay with us. Jakarta is flying high this year, and we're going in-depth on the Indonesian market with the very person in charge. Well, Indonesia's trade minister, actually. We've been discussing Indonesia's economy with Mari Pangestu. She joins us from Jakarta. Ibu Mari, before the break, you were alluding to exports. How are exports looking, given that commodities have had quite a good run?
Well, in the first few months of this year and few months of last year, obviously commodity prices were down, but we've seen a pickup in commodity prices in the last 2 or 3 months. So as a result, we've also seen exports picking up. And that's good news, I suppose, for Indonesia, because we still have a large proportion of our exports comprising of commodities. But nevertheless, the average price is still obviously much lower than the very, very high commodity prices in 2008. You take palm oil, for instance. At this time last year, palm oil prices were above $1,000. Right now, it's around $700, so slightly more than half. So in terms of value, I think palm oil exports will still be lower this year compared to last year. But in terms of volume, actually, it's been relatively stable. It's come down, but then come back up again. When prices were low, actually, the volumes picked up. And we think that with the stimulus in China, as well as post-election India, we think that there will be a recovery in terms of the volume growth. But because prices will not reach the high levels of last year, I think value-wise there will still be a decline.
But that's for palm oil, Ibu Mari. How about exports as a whole? They tumbled, what, some 30% back in March. And you've said before there could be a 10% slump in exports this year. Any reason to revise that projection, given rising optimism that the global economy may be close to a bottom or already there?
Yeah, we certainly have seen it in our export figures also. You know, month on month, we saw a fairly sharp contraction, the largest being in February with a large contraction of minus 17% month on month. And then in March, we really saw the pickup, you know, like this bottoming out story, where March to February, actually there was a positive increase of 20% in value terms and a much larger increase in volume terms. And then in April, there was only like -1%, -2% decline in value and volume. So we do feel that, you know, in a sense, the bottoming out is happening. But just because 2008 we're coming off from very high commodity prices, we do still predict a contraction in the value of exports this year compared to last year. But we've probably become a little bit slightly more optimistic. If we were projecting minus 30% decline in value terms, I think we're hopeful that we can see a lower contraction of around minus 20% for this year. And in terms of volume, if in the beginning of the year we were projecting minus 10 contraction in real terms, minus 10 to minus 15 even during the first part, end of last year and beginning of this year. But I think for now, seeing the pickup in some of the volume growth, especially for the commodities as well as some of the other products, we hope that the contraction in real terms, so volume terms, maybe can be maintained around minus 5 to minus 10%.
As for palm oil, Ibu Mari, you said that you're counting on China as well as India. Do you see both markets, well, contributing more to your exports or accounting for more of your exports? Do you see that percentage climbing?
I think in terms of, in relative terms, probably, because last year, we did export a lot to Europe, and part of that is because of the biofuel needs. We do see a slight decline in Europe just because of the recession that's going on in Europe, whereas China, with its fiscal stimulus, after sort of a detected decline in the second half of last year, we see a pickup beginning around March, including also with India. So probably they would, in the end, account for a larger share. And we're also pushing domestic demand for palm oil with the mandatory requirement of 5% mix of biofuel based on palm oil within the petrol mix. So this year there will also be demand from domestic market for the crude palm oil as well.
Ibu Mari, on the show this morning, we've been doing a bit of crystal ball gazing, candle watching. Where do you see palm oil prices? I mean, London Sumatra estimate between 2,300 ringgit and 2,005 until the year end at least. What's your own projection?
Well, I would be very rich if I could make correct projections on commodity prices. But I think we're probably back to about 2006, 2007 situation, where palm oil prices were between 500 to 700. Right now, after reaching above 700 in May, I think June has come down slightly. So I think we're going to see ups and downs, but probably stabilizing around where it is now. So we do hope that this is a relatively stable situation. You don't actually want very sharp increases either way, either sharp increases of commodity prices like we experienced last year. Either way, going up very quickly and then going down very quickly. I think from the perspective of either as an exporter or as a consumer, because it does affect the domestic price of cooking oil, I think a more stable trend is what we would prefer to see, and it seems that the contributing factors to the prices seems to be indicating that way.
Okay, Ibu Mari Pangestu, thank you. Mari Pangestu, Indonesia's Trade Minister, joining us from Jakarta.